The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, folks. We're going to have a special guest at the half hour. Bill Ehrman of Ehrmanometry is going to be on. I only listen to about 3 people in the whole world for their opinions, and he's number 1. So see, the other 2 are the Father and the Son. I haven't met the Holy Ghost yet, but that's probably coming. Anyway, Bill is very, very smart, Harvard trained, and he's going to show us some of the things that he does. But he does some of the best stuff I've seen. We are looking at a situation Friday, actually it happened on Wednesday, when the market pulled down and held that 61% retracement in the New York Stock Exchange, the Dow Jones. All of them did pretty much exactly the same thing. So it was pretty much telling you that there was a pretty good bottom forming, and this is in fact what happened. We had a really strong indication from Basil Chapman because of the way the VIX was acting. I mean, there was absolutely no fear in the market at all. The Dow had sold off from about 400 or 500 points, I believe, and more than that, and it actually made no ripple in the VIX at all. It would hardly move, and that's usually a sign, that something is really really happening. So we'll have to just wait and see, but it looks like we're going to be going higher for the rest of the day anyway, and as long as we don't take out that low we made last Wednesday in the S&P, that tells us and also in the Dow and the New York Stock Exchange Index, that we've had a major cycle low occurring at that time. So that's really what we want to keep an eye on. But that VIX index was the key, I believe, because once it wouldn't move and then the market stops exactly at those retracement levels, those are indications that cycles are usually bottoming, and of course the trend is up. If you want to check out a market that's going absolutely ballistic, you should look at the German DAX market. It's up 3% again, almost 2.5% today. It was up 3% on Friday, but it is just literally in a parabolic move, going straight up. We're within about 150 pips of the very large ABCD pattern, but it has not moved, it's just gone straight up today. So whether that's affected our markets or not, I'm not really sure. The big news, of course, is the fact that West Texas Intermediate crude has made new lows. Brent North Sea crude has not made new lows. It's just backing off to the 61 or 78% retracement of the lows we made 6 weeks ago. This could be a very significant event, folks. So from a commodity perspective, we really want to watch this, because they're basically the same product. One is a little supposedly higher quality than the other, but when one doesn't make a new low and the other one does, that's a divergence that deserves our attention. So that's what we really want to be watching. Someone asked the question is, why doesn't the gas stations start dropping their prices? Well, part of the problem is the gasoline is a byproduct of the crude oil, and it's been going up quite a bit, and it's backing off here. Let's just take a look at it. It hasn't backed off nearly as much as what crude oil did. If we look at the gasoline futures here, only take me a second to get this up, and then we'll take a look at it. You'll see that the gasoline futures have only come down about 27 cents, and they're not even at the 382 level of the last low. I mean, you talk about something that looks pretty bullish. This would be the one that you want to be looking at. Oh, they're right at the 382 today. So this is a really significant event, in my opinion. But take a look at this. You've got gasoline futures went up to almost $2 a gallon. They backed off to $1.70, and they were at $1.25. They're only at a 38% retracement, and crude oil is making new lows. They've actually made new lows from January. So this is a really strong indication that this is a really big turn here in oil. I would be looking to buy the crude oil somewhere, around this ballpark at risk a buck or two. West Texas has made new lows, but the Brent hasn't, so you'd probably want to buy the Brent. Another thing is to watch some of the oil stocks. Some of these oil stocks have been getting, hammered really badly. So why don't you take a look at some oil stocks? We got the stock market in a bullish mode, for heaven's sakes, with making all those, significant bottoms, and the VIX not moving. So take a look at Chevron or Exxon Mobil, and those might be ones that would be telling us that we're, over a pretty significant spot. That's the way I would look at it. But there's something big happening in that crude oil market with all these things going the way they are. Heating oil is backed off also, but again, here's one that also is a good 35 or 40% off the bottom. So it's only the West Texas Intermediate that's causing the problems. We've seen this indication here in the transportation index, where we had some really strong support come in, also exactly at the 61% retracement last week. That will be something to look at, and we're going to have Bill Ehrman on the show, who was one of the folks that alerted me to the fact that we had a pretty significant bottom due to come in this past week. And as you can see, the transportations came in, right at the 61% retracement, held there for 2 days, and now we're starting to, move up to the upside. We had the same thing occur in utilities, but the utilities stopped at the 786 level, because they've been not been far, but they've been beaten up a lot more than the rest of the stock market. So they held at the 786 and have also started to, rally a little bit. So as long as we don't take out that low that we made last week, it looks like we're going to be, going higher in some of these stocks. We've got the big event, of course, on March 19th. We've got the spring equinox. We have the solar eclipse, and we have the new moon, all occurring around the same. They're all occurring on the same time. In addition, remember, we have Apple coming into the Dow Jones Industrial Average on March 19th, and then we also have Visa is also splitting. They're splitting their stocks, which will also be a big difference. I don't remember. See, Apple's coming into that. I think they're taking out AT&T, which has been in the Dow in and off and on for 100 and some years. But interesting about American Telephone, when telephones were first becoming popular back in the 20s and 30s, American Telephone, went bankrupt during the Big Depression. In fact, AT&T, I believe, went bankrupt twice during that time, and yet it's been in and out of the Dow, for so many different time periods. So we'll watch it. I'm particularly interested in what Basil's been talking about his skyscraper theory, and actually, watching that. I noticed that BlackRock is buying the old Sears Tower. I think it's called the Willis Tower now, and they're paying $1.3 billion for it. I don't know what it costs to build. I think it's 35 years old now, if I'm not mistaken, but it's a beautiful building. I've been in there many times, because on the 50th floor was one of Goldman Sachs's trading operations, and I was invited back there a couple of times to give speeches. And as you looked out the window, you could look on to the Chicago Board of Trade, and you could see the goddess Ceres, the goddess of grain, on top of it. It was really a beautiful sight. I took some pictures, but unfortunately, my photographic ability is much to be desired, and they never turned out very well. But it's a beautiful site up there, and it's a lovely building, and incredibly secure getting in and out of it, at least from my perspective. But who knows for sure. Okay, we want to talk a little bit about the gold and silver. They're trying to make a bottom. Silver last week came within 8 cents of the exact 786 retracement. We've since been able to rally about 60 or 70 cents per ounce. Gold has rallied a little bit, then gave it all back again, just like it has been. It still looks like it's, in a bearish mode. It hasn't given any sign that it wants to turn here, and silver really hasn't either, because the quality of the rally has been, very, very sparse. So we want to watch that, very, very closely. This market has been selling off. The stock market has been selling off, very, very orderly. I mean, we had a 2 weeks down and stopping exactly at the 61% retracement of the previous move. I mean, you can't be bearish when something like that happens, because it tells you that there's been major support, coming in at that point. And if we go just a little bit farther and just look at what the Dow Jones did, because that's really taken over, we stopped at the 50% retracement in the Dow last week, whereas we did not stop there in the S&P. We went down to the 61% retracement in the S&P, and then also in the New York Stock Exchange Index. So it appears that we've got a big date coming up here sometime in April based on the Bradley model, but that'll be down the road a little bit. So we have to get through the March 19th. Is going to be a really key day, in my opinion. So yeah, someone asked the question if it's different this time. It probably is. I guess borrowing all this money, like what's happening with the government, really doesn't mean anything, because as long as you keep borrowing, there's not a problem. You don't have to worry about ever paying it back. This is going to be different this time, but thousands of years of history says that's not the case. But we'll let history decide whether that's going to be. But I don't see any reason here to get excited from the short side of the market, because these cycles bottomed right when they should have, and you want to be looking to be a buyer. Last week we talked about that several times, and we mentioned the facts that the VIX was acting very bullish. I mean, even I get my information from Basil. I listen to what he has to say, and it was basically telling you that it didn't want to go. The market did not want to go down very much. That was the bottom line. Let's just take a look at the VIX as it was on Friday, and you'll see that there was no fear in the market. There was nothing happening. I mean, it was just really nothing. And now it's just starting to back off. And we have to get that VIX above 18 or 19 to get any people bearish on it at all. So that's the key to be watching. On one other note, we're going to have another guest on Thursday, Norman Winsky of Astro Trends. He was one of the very first people to really deal in astrology, many, many years ago. He is going to be our guest, and he knows some folks that dealt with Evangeline Adams and wrote books about Evangeline Adams, who is the personal astrologer of J.P. Morgan. So we're going to question him about that and look at some of the technical indicators he's looking at. He's very good at what he does, folks. I believe his uncle was one of the men who started NASA, as I recall. We'll ask Norman when we get him on the air. Anyway, we're going to take a little break here to pay a few bills. We got the stock market screaming up, gold backing off a little bit, and oil is in the TILIT.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartlys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to take a look at the euro here. We've had a really big down move. Sorry for laughing, but somebody makes a funny comment into the Tiger TV, and I happened to be reading it, and I was getting ready to make my decision, and or my discussion on the euro, and it caught my eye as being relatively funny. But anyway, the euro looks like it's heading towards par. We're having a little bit of a bounce today of about 120 pips off the bottom, but frankly, a person ought to look to be a place to sell the euro. We could get a 300 to 500 point rally off of any bottom, and it'd still be very, very bearish. This has so many things heading down towards the 99 or par level of 100 in the euro. It's really quite amazing. I don't know if it has anything to do with what Draghi is doing or what our Fed is doing. I don't think it makes too much difference anymore. They know that the Fed is going to have to raise rates, sometime in the future, whether that's 2015, 16, 17, or 18. But I don't think the market really cares about that. It's going on its own, and it'll keep going until it's finally done. And when that is, we will certainly keep you informed of when that will happen. So the main thing is the euro does look lower, as does the pound. We're having a little bit of a bounce today because there has been a slight resistance in the U.S. dollar index up around the par level 100. we have to take our hats off to Tom O'Brien, because when that thing was trading at 72, nobody wanted it, and Tom put a crown on it and said King Dollar. And sure enough, our fearless leader, led us to the promised land on that one. That thing has been basically straight up for 3 years, which is really quite amazing considering the downtrend that it had been in for so many years. The Japanese yen versus the U.S. dollar has had a little bit of trouble up in this 122 level. We have not been able to crack it from the breaking above 122 on a closing basis. It's still having a little trouble, which is very unusual because that index follows the Nikkei Dow just incredibly accurate. And lately, that correlation that we had has slipped away. I'm going to show the chart of the New York, of the Nikkei, and you can take a look at it, and you'll see that the Nikkei has taken off and gone, far, far higher, whereas the euro, even though it did, break down, the Japanese yen didn't even get above the highs that we made just several months ago. So this is a sign that there's something different going on in that Forex pair versus the Nikkei Dow. And if you have to have a choice between which one to follow, you should follow the Forex pair, the yen versus the dollar, because that's real money. That Nikkei Dow is like ours, that's, contracts and stuff like that. So the main thing is you want to watch that cross rate between the dollar and yen. And if we do get above the 123 level, we can go, to 150 without any trouble at all. There's really no trouble at all. It's basically what you're looking at here is a market that the yen was at one time 367 going back in 1989. We came all the way down to 75, and we're only back to in the 120s. So to 150 is not even 50% back. So that's the main thing. That's the thing that might be going to talk about. So we'll see if this is going to be the case. So there will be a bubble coming, and we're starting to see certain signs of it. We're watching, we posted a chart of the IBB, and as you can see, it's making a potential 3 drive to a top, but it's still too early. We've got the 19th, folks. This is the 16th of March. Okay, you always heard about the Ides of March. Well, we've got some major stuff. We got the spring equinox coming on the 20th. We got the solar eclipse. We got the new moon. We got a lot of stuff coming here at this time on the 19th, along with Apple and Visa. All this stuff is going to make for the 19th to be a really, really wild day, in my opinion. So we'll see if that's going to be the case. March 19th was a very important day in my life because I was accepted to medical school back in, 1846 or wherever it was, and to the Stritz School of Medicine in Chicago. And I almost ready to go, but at the last minute I decided to not go, thanks to one of my physician friends that told me that was not the profession to be in, and God bless him, he was right. Okay, we're going to have Bill Ehrman on at the break, so we'll see how much higher these stocks will go. We're still up almost 200 in the Dow, and gold still backing off.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. And we have Bill Ehrman on the line from Nashville, Tennessee. Bill, are you there?
I am here, Larry. Good morning.
Welcome to the wonderful world of technical expertise where you can be on a radio show from almost anywhere. Hey, thanks for joining us today. And I wanted to tell the folks, I told a little bit about you before the thing started, that I started talking to you about 6 or 7 years, more than that, I guess about 7 or 8 years ago. And you had made some interesting calls of where the market was going long before it ever happened. And I always respected that. And then I started to look at some of the work that you had done. And what I'd like for you to do is to, I know you were trained at Harvard, but could you tell the folks just a little bit about your background and how you got started into doing this? We have a whole half hour, so take your time. And I've got your templates up ready to look at when we talk about those. But let's just give us some basic background about yourself.
Okay, well, I was born in Chicago. Does that go back far enough?
Yeah. Well, that's was Chicago still a city at that time?
I can't even remember how long ago that was. Yeah. But anyway, I was in the family business for a while, which was we were in the fuel business, coal and oil. But the air pollution kind of killed that, and I got involved in real estate. And primarily, it was a consultant to a lot of mortgage companies. In the early 70s, there was an oil problem, and there was a big real estate crash. And I was traveling around the country trying to, what they call REL, bailout REL, which is real estate owned by mortgage companies, and they wanted to get rid of it. And a dear friend of mine, Sam Hale, was involved with the market. I had met him years before that because we were both interested in the music business. But anyway, Sam said, look, you've got a lot of spare time. You're staying in hotels, traveling around the country. Why don't you look at the stock market? There's interesting cycles. He said, well, I said, what do? He said, you just count the days and notice it, look for symmetry and things. So I did. And the next time I saw Sam, I showed him what I got, and he said, oh, you made a mistake. I said, how did I make a mistake? He said, well, you counted trading days. You're supposed to count the calendar days. Oh, I said, okay. So I went back and counted the calendar days, and I started to notice that if I had a move of 100 trading days, there would be a similar move of trading days. Calendar days and trading days seem to be related. And I found more and more of that happening. And then I said, well, what's the ratio between the two of them? And, of course, 365 and roughly 252 change trading days a year, the ratio is roughly 1.44. Then I realized that was a golden mean ratio, and a light bulb went off in my head. And that's how I got started doing cycle work and timing work in the market, just by a mistake that I had made, and realized that there was tremendous correlation between the number of trading days and calendar days, and that ratio was a golden mean ratio.
Well, folks, I can tell you firsthand that Bill Ehrman has done better in these 8 years that I've known him of calling market turns than anybody that I have found, period. There's no one that's even been close. So, Bill, what I'd like to do is maybe to go to that first chart that you sent us that goes back to 1962, and you want to show the folks,
Sure.
about these points that you're looking at, and I'll try to highlight them for them.
Okay. I'm ready.
Go ahead. Just start going, and I'll follow along.
The first, basically what you're looking at is a series of similar right triangles, and that's almost like a spiral. In other words, the ratio between line AD, this the vertical, and I see it, the letter is missing. Let's say that 5077 is to 3093. Unfortunately, the answer to that is 8334, and that's not showing up on here. Mm-hmm. In other words, what this does is show three-term continuous proportions, which is a $10 way of saying what everybody knows. The ratio remains the same in an expanding or contracting manner. In other words, 4 is to 2, as 8 is to 4, as 16 is to 8, etc. The ratio between 5077 and 3093 is equal to the ratio between 5077 and 8334, which would show up if somehow we got cut off the bottom of this template. 8334 is the exact number of days from the 1974 bottom in the S&P to the October 2007 top. That's in the text up above. So that's just like saying, again, 4 is to 2 is 8 is to 4. 3093 is to 5077 as 5077 is to 8334. So there you see the market perfect to the precise day, going all the way back to 1962.
And that was every major low and high.
Well, yes, that's what we're using here. Now we're going to use those. Let's look at the example number 1. Unless folks want to take a second, maybe they're writing down the numbers up above. But let's go to the next template, and we'll see how. Well, here, let me just, before we do that, the period 1962 to 1982, a 20-year period, and sometimes including 1987, which would make it 25 years, that's kind of an incubator. And all of everything that happens even now can be related back as if it were born in that period from 62 to 82 and sometimes 62 to 87. Those highs and lows in that period, using various basic math, project even what's happening today and also 10, 20 years in the future. So just think of 62 to 82 and 87 as an incubator as when it comes to timing. Why that is, I don't know. Okay, let's look at the next template.
This is example 3. Is that correct?
No, we're looking at example 3. So what we
Okay.
have to look at example 1.
Okay. Go ahead.
I'm ready, but it's not up. I don't see it.
It's up. You're just not seeing it, but it's in there. You just have to click on the host thing, but you're not able to do that. But they're able to see it, so that's not a problem.
Okay. Well, then I'll have to go to my example 1 because I'm not, as you say, I'm not able to see it here, and I don't want to do anything by memory here. And as far as where the line segments are, I don't want to create any confusion. But the value from 1962 to 1974 S&P is 3,093. And the value from 1974 bottom to 1982 bottom is 1,984. And once again, the ratio between 1984 and 3093 is the same as the ratio between 1272.6 rounded to 1273 and 1984. So that's like 2 is to 4 is 4 is to 8 again. So that 1273, that's the exact number of days from August 12th, 1982 to August 25th, 1987. So once again, using the 62 bottom, the 74 S&P bottom, and the bottom in 1982 on August 12th, those 3 days, using the proportion between those two moves, 62 to 74 and 74 to 82, gives us you exact day of the top in 1987. So there's perfect order in the market. Now, a lot of people may not be able to, won't get the same answer because we have a proprietary method of counting trading days. For example, the 5077 from 1962 to 1982, that includes 28 days we added to the market because in 1968, the market was closed for every Wednesday because of back office problems. There were paperwork jams, so they closed the market every Wednesday.
Wow.
We determined that those days needed to be added back, which we did, and that gave us 5077, and otherwise we would have had 28 days less, and what I'm showing you wouldn't be working. Now, to prove or to validate that what we did was correct is 5,077 days was repeated again without our tampering with it between the 1987 top and the 2000 top. Again, 5077. So when we modified the 62 to 82, the number we came up with was what is the actual number was repeated from 87 top to 07 top. Go ahead, Larry. You wanted to say something, and I interrupted you.
Well, this is such I have such a great interest in this. But what I'd like to do is folks would probably would like to get in contact with you to learn more about this. I know you're in the process of getting a book done, discussing your methodology and stuff. And what is the best way for the folks to reach you, Bill?
Well, our website is Ehrman, E-R-M-A-N, just like my name, and then Ometry, as in geometry, Ehrman Ometry, ERMAN-OMETRY.com. That's the website, and our email address is on there. Our email address is ermtry, E-R-M-T-R-Y, at ergonometry.com. So
that's very, very interesting. Now, someone asked a question in the den here. I mentioned this past week that you were going to be coming on, and you were looking at a low to come in sometime early this week. Could you tell us a little bit about the number sequence that you were looking at last week that gave us that low? Or are you able to share that with us?
Well, there's just two very simple things without getting getting into the weeds and giving you all the complicated algorithms we used to figure out last Wednesday as a bottom. But for example, the number 5077, which is the number of days after we tampered with it, from 62 to 82. If you multiply that by 1.618, the answer is 8,215. That's the exact number of days from the 1982 bottom to last Wednesday. So that was one way. But again, another example, just using basic Fibonacci, which everybody in the world knows about. But if you counted the days the way we did, you would come out with last Wednesday. Once again, 5077 times 1.618 is 8215. Add that to the 82 bottom, and there's last Wednesday. Another thing, but when I was mentioning the relationship between calendar days and market days, it was roughly calendar days are roughly 1.44 of trading days. At 1.44, is a famous ratio. And the let's see, well, I'm trying to figure out the best way to explain this, Larry. 144 calendar days is roughly 100 trading days. The last major low of October 15th was exactly 100 trading days prior to last Wednesday's low. So there's a 100-day move, so that would be 144 calendar days. And the frosting on the cake there is it was actually a move of 50 plus 50 from the October 15th low to the December high.
Wow. It's harmony everywhere.
Yes, to the December 26th major top was 50 days, and from there to last Wednesday was 50 days again. I'm sorry for the beeps. There's a call coming in.
We're almost finished with our segment here, but Bill, what I'd like to do is maybe in a couple of weeks we could have you on the air, sometime in April, and have you on as a guest again, and maybe we could share a little bit more of the type of work that you do. Would you be willing to do that for us?
Time permitting, yes, but I'd like to just say one thing, that to me, the most important time I've ever seen is coming up in April. We've never seen a day that has more importance, let us put it that way. That'll be coming up in the last half of April. It's just huge, so something big should be happening then.
Well, we'll be watching it closely, and if it gets as close and you have the time, we'll have you on the air.
Okay, Larry, thank you.
And thank you for coming with us, Bill, and we appreciate that. That's Bill Ehrman of Ergonometry. That's ERMANOMETRY. And you can go to his website and take a look at it. I certainly recommend his book to anybody that is interested in technical analysis and Fibonacci. We'll take a little break here to pay some bills, and we'll be back to wind things up.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, we're back, and we are still up quite a bit in the stock market. Gold has, sold off a little bit more. We made new lows in platinum, but that's more of an industrial metal than anything else, even though it is considered a precious metal. So that's not a good sign. But we'll cover that on the Commodity Show on Thursday. The main thing here is that, just like Bill Ehrman told us, the importance of this date that we had last Wednesday, being, perfect Fibonacci numbers from the previous lows and highs. That's where it all comes together. As long as we stay above that high of last week, we're going higher. That's what it looks like. The VIX index has already told us that. It couldn't get above 17 as the stock market sold off more than 400 or 500 points in the Dow. That's a pretty strong indication that there's just absolutely no fear in the market. And which there shouldn't be, because, the Fed has, got their back for everything. And we got the Fed minutes, I think, tomorrow. And also, we have St. Patrick's Day tomorrow, folks. That's the day that they dye the Chicago River green. If you've ever been in Chicago, lived around downtown, or been through the downtown area on March 17th, they put food dye into the Chicago River, and the only person you can find that's sober is someone that's driving a truck that's a tourist that doesn't get through town, because that whole town must consume more beer and alcohol on that day than they do on New Year's Eve, because they really do party. It's really quite amazing. In fact, they start partying on the floors years ago, and they had lots of fines for guys that had their flasks, and so it was interesting that they had to to go through that. So we'll watch that down the road. We'll probably see things on it on the news tonight. Take a look at it, because it's really an event in Chicago, because there's so many Irish people. I don't know if you folks know this or not, but Chicago is the second highest populated Polish city in the world, right after Warsaw. So there's a great high Irish and Polish, Italian. I mean, it's really the melting pot of the world. So getting back to the markets, of course, we want to keep an eye on the stock market, because someday this thing will turn down. But frankly, I don't see it right now. Basically, just watch that low that we made last week. That was just an incredible low at the 61% retracement on the New York Stock Exchange Index, 50% on the Dow, 61% on the NASDAQ. The VIX Index could not get out of its way. It needs to get above, I believe 18 is what Basil was talking about, and he's the master of that. So I think it looks like it wants to go higher. That's about the only thing that you can possibly, say about it, because this trend is still up. There's nothing else you can possibly do. And one more message is on Thursday, I'm going to have another special guest. Norman Winsky of Astro Trends will be on. He has some good information about J.P. Morgan's personal astrologer, Evangeline Adams. He's a expert astrologer, along with being an expert technician. Covers all different kinds of markets, and we'll have him on. And he does a really good job. I've known Norman for, well, it's about almost 35, about 40 years already. And so it'll be a good show. He's got a good sense of humor, so I'm sure he'll have some interesting things to tell us. And I hope you like the guests that we have on here, because what I try to do is, because of my background, I've met so many different people, and some of them have a very colorful past, and a lot of them have some really great information. And what I try to do is to share them with you to get an idea of some of the things that are out there and what people are thinking about and what they're doing. I think it helps all of us to really give us an idea of where we are. So that's the key to learning, is to try it a little bit every day. So live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.